Hello everyone, welcome back to Pete's Investing, and today we're looking at the Magnificent 7 stocks again. Now all the charts are still showing bullish momentum on the stocks generally, and we're going to compare that to the S&P 500. We'll include backtesting, which demonstrates how you could have traded one of two strategies, so don't forget to hit that like and subscribe button to support the channel. Before we get into the analysis, if you have questions around these daily videos, then reference the +1 videos identified by the +1 symbol, which breaks down these daily videos into simpler language. So in terms of the outlook, as of today, June 11, Microsoft reclaimed the top market cap at $3.5 trillion, driven by strong cloud and AI performance. The stock is near all-time highs following a 16.5% surge in May. Excuse me. Nvidia continues to lead in AI hardware, contributing significantly to a $1.75 trillion market cap increase among the group in May. Meta Platforms benefiting from AI initiatives, with stock reaching $702, reflecting investor confidence in its AI strategies. Alphabet, Google, strong ad revenue growth and AI advancements have propelled the stock to $178.60, indicating robust fundamentals. Amazon investing heavily in AI infrastructure with plans for $100 billion in 2025 capex. Stock has rebounded to $217.61 amid tariff relief and cloud expansion. Apple facing challenges with 19% year-to-date stock decline due to limited AI monetization and a lackluster iPhone upgrade cycle, currently trading at $202.67. Tesla stock has recovered to $326.09 after earlier losses amid ongoing AI integration and market volatility. So what I'm showing you here is the monthly, the weekly, and the daily chart for the Magnificent 7 stocks combined. And before we go to the next chart, compared to the S&P, the monthly still shows a very bullish momentum after having a bit of a dip there that was around April. On the weekly, that's also showing bullish momentum, again after showing a dip around the March-April period, and it's now moved higher on both the CCI and the price. And on the daily, likewise, it's still moving higher on the price as well as the moving averages of the CCI. Now this is the Magnificent 7 stocks combined, and if we go to the chart which compares them side by side, this is the Magnificent 7 stocks on the left, and on the right I've got the S&P 500, and it should be no surprise, both are very similar in terms of chart pattern. So I just wanted to highlight that for you up front to show that the S&P 500 and the Nasdaq pretty much reflect the Magnificent 7 stocks on their own. So first, looking at Alphabet or Google on the monthly, it's bullish momentum on the price chart, but notice the CCI is still below the moving average range, so somewhat cautiously bullish on the monthly. And that was after we had this bearish divergence, lower highs on the CCI versus higher highs on the price. And that actually broke down to our minimum range. And on the weekly as well, that's also broken above the moving average of the price, but this one's on the weekly is broken above the moving average on the CCI, so giving us a bullish momentum, which means you can better or more reliably go long on the daily. So remember, we always trade on a lower time frame in the direction of the higher time frame. And here we've got the daily, that's already bullish on the CCI and bullish on the price. Now what we look for as well is any divergence, and what I want to also highlight as well is these little grey areas here, and there's a blue grey area there. That shows where there was a fair value gap, and that means that the price is retraced back to fill those orders that previously weren't, and that broke down quite easily. And here on the daily we had a fair value gap there and a fair value gap there, and they were both filled as well very quickly. Now we go to the intraday chart. Here we've got the daily here on the left, and on the right side we've got the hourly. So even if you're trading on the daily, it's worth looking at the hourly for any divergence that may cause some concern. So for example, back here that was a slightly higher high there, but I'm going to consider that a double top versus significantly higher highs on the price, and that actually pulled back. And the way you measure that is just draw a Fibonacci in that range, and that's at 23-38% range as a minimum. The price pulled back, then it bounced out of there. Doesn't always do that. Sometimes it breaks right through that 23-38% range, and we always track it as it keeps dropping. But at the moment, somewhat bullish on the hourly, but just be careful. We've got it's broken into that moving average range of the CCI, so I'd like to see that break higher In that case, the price would have already broken about higher as well on the price chart. So once that breaks higher, you can more confidently take long trades in the direction of the daily. So the daily is, again, as I said, it's already bullish. Now what I've got next is the back testing here. And what we do is I've back tested here on the daily on the right side. So you look at the weekly on the left, and I've taken long positions here based when the price and the CCI break above the moving averages, and that's where the stop loss approach up here and the average down approach here. So the two different strategies you can trade, and basically you stop taking trades or stop trading that method as soon as that breaks into that moving average range on the weekly. So again, on the stop loss approach, it's generated $84. Again, assuming you're trading $1,000 lots. I'm just using a very conservative amount to trade with. You can obviously put in a lot more, and the average down process has generated $103, just slightly more because of those 3 instances there, or 4 instances where we averaged down a few times. So for Amazon, that too is bullish above the price moving averages, and notice the CCI is actually broken into that moving average range, moving towards a bullish momentum. Again, similar to Google, this was also showing a bearish divergence versus high highs on the price. Now, so moving towards a bullish momentum on the monthly, the weekly is already bullish and there's no divergence on that. Notice back here as well, we did have if you look at those peaks there on the CCI versus those peaks on the price. Normally you want to see the CCI moving in line in tangent with the price, with the exception of these divergence. And now you can see higher highs on the price versus lower highs on the CCI, and it pulled back quite strongly, almost to the 100% retrace level of that Fibonacci range. We take it back to the previous low before that divergence started. So that's actually played out, and no current divergence in play. So bullish momentum on the weekly. On the daily, however, that's also bullish on the CCI and the price, and also no divergence. Notice here we've had a couple of fair value gaps. This one was filled, but down here that was partially filled, and we may see a potential retrace to the downside. So I'm going to mark that between that high and that low. So it could possibly break into that range sometime in the near future. It could take actually weeks, months, or even years to play out. So there's no guarantee it's going to drop tomorrow. But on the daily, that's a potential retrace for a fair value gap to be filled. And again, if we go to the intraday chart, again, we've got the daily here on the left, and this is the hourly here on the right. So what we've got here, currently we've got a bearish momentum, or a bearish divergence on the CCI versus higher highs on the price. And if I was to draw a Fibonacci retracement on the hourly from that high, first we'll take it back to that low. So that's the initial range we can expect it to break into, at 38% range. But of course, this could fall a lot further, and that'll be an extended range if it does break lower than that. So again, I take it back to the recent low, which would have been that area there, but that would have been a more significant low at that point. So I'll mark them both there anyway, but that's our initial target area as a retrace. Again, as I said, it could hit that range and then bounce out, or it could actually fall a lot further, and we take it one step at a time. Now, if we go to the back test, similar time frame to the previous chart, we make that, the left side is, we're going to make that a weekly. Again, bullish momentum here on the weekly. And you can see there as well, we had a fair value gap that was mostly filled with that bearish candle there. And back here, we've got another fair value gap to the long side. I'll mark that. Now that hasn't been penetrated yet on the weekly. So very likely might see the price rise further into that range before taking any further retrace. So at the moment, bullish momentum, that's a positive. No guarantee, of course, but that's a positive move for a bullish momentum on the daily. And on the daily trading backtest on the stop loss approach, it did actually fall below our baseline of 100,000 and it's finally broken higher in that little range there. And that's actually giving you about $27 return. And the average down approach, because of that multiplying effect, has given us $152 return so far. Okay, Apple's not looking too hot at the moment. On the monthly, we've got this a very long-term bearish divergence. It started back in around about 2021 versus high highs on the price, and that's fallen back a few times there and we've had smaller, if I zoom in a moment for this one, you can see there we had smaller range of divergence. So from that peak even to that peak there, we had higher highs on the price versus lower highs on the CCI. Even extending it back to that peak, we had more highs versus lower highs on the CCI, and so on. But that's been a very long-term bearish play on the monthly. And at the moment, the CCI is still bearish, so just be careful. And also the price as well is broken just about below that moving average range, although so far it's making some slight movement on the monthly. On the weekly, we had another bearish divergence. That's broken down quite a lot from our peak up there. And both the price and the CCI are bearish at the moment, so avoid going long daily. And on the daily here, you can see it's been consolidating in that range for some time. You'll see here as well, we had a few fair value gaps, so they were all filled. And that one, the more recent one there on the weekly was filled. And here on the daily as well, those recent ones have been filled as well with that price movement. So again, somewhat neutral, I would call that neutral on the daily. If we go to the intraday chart, the daily here on the left, and on the right I've got the hourly. So what we're looking for is any positive moves in terms of bullish divergence, and the CCI there is moving in line with the price, so there's no bullish divergence there. You can see there we had a small range of a fair value gap, and that was easily filled with this price movement here in those particular hours. Another fair value gap there, that was filled there as well with those hours, and another larger one there, a big gap up there, filled with this price movement there. I'm not going to show you any back testing to go long, because again, just remind you on the weekly here, that's still bearish, has been bearish for some time, and the price is also bearish on the weekly, so below the moving averages. So Meta is showing bullish momentum on the monthly price chart, and the CCI is not fully drawn, but you can see there it's slightly broken to the upside, so somewhat bullish, or very bullish momentum at the moment on the monthly. But do notice as well, we've got a lot of fair value gaps down here. Now, that could be an ominous sign for some time in the near future. This could take years to play out, so there's no panic stations yet, but just be aware of those fair value gaps. They need to be filled at some point, very likely. And the more recent one is up here. Let me just mark that. That's the more recent one, but down here, I'm going to mark that right down to there. They haven't been filled yet. So orders unfilled down to that level on the monthly. On the weekly, we've got bullish momentum, the CCI and the price above the moving averages. Again, another fair value gap here, just to be aware of. Again, we're not saying it's going to happen next week or next month. It could take years to play out. And on the daily, bullish momentum, but notice the CCI is curving down, so we might see it retrace in the short term. We've got another fair value gap there, more closely to that point. And this one has pretty much been filled, but down here we've got another one unfilled as well on the daily. So I'll mark that as well. So you can always pay attention to those. There's no divergence to worry about so much in the short term on the daily. If we go to the 1 hour chart, again the daily on the left here and the 1 hour chart on the right, we've got a somewhat almost a double top on the CCI versus higher highs on the price. We had another little bearish divergence here that pulled back, and if we're to draw a target range on that, assuming it pulls back, this could keep rising of course, but assuming it pulls back, I'll take it back to that low. That'll be our minimum target range. So again, this could I don't trade these divergences. I look at them as a potential area to get out of a long position. So if you're holding long positions here and looking at the hourly, considering also the dailies showing a bit of a pull down, you may want to take your profits. But again, if this breaks significantly below that moving average, then very likely it's going to come down to this 23-38% range. So again, wait for this CCI to start curving up and go bullish before taking any further long trades on the daily at least. Now if we go to the back tests, I'm going to show you here, again, the weekly. If you're trading on the daily, showing you the weekly. So taking long positions during this period on the stop loss approach. Again, trading $1,000 lots, that's generated $84, and the average down approach has generated $523. So it did quite nicely in that little range there. So for Microsoft on the monthly, it's still after this bearish divergence. You'll notice here we've hit our target range and it's actually recovered from that. The CCI is moving to break outside of that moving average range, so that's a positive, and the price is already high above that moving average range. So that divergence has already played out. You'll notice here we've got a few fair value gaps that were filled by the wick of that candle. That one there was filled by those wicks, but this one down here has not yet been filled, so just be aware of that. I'll mark that as a potential. Again, there's no guarantee, but that's just something we need to look out for. Here on the weekly, we've got a bullish momentum high above the moving averages and the CCI likewise. And notice here as well, if we drew a divergence, we've got higher highs on the price in the same period, so far lower highs on the CCI. So again, if that starts pulling back, we're going to consider that a bearish divergence. So I won't draw a target range for it yet, but we'll pull back to a Fibonacci probably a bit down to that level if we did. The other thing to notice as well is here we've got another fair value gap that hasn't been filled yet. I'm going to mark that. So that could be another sign of a pullback in the near term. Again, that could take weeks or even months to play out, so just be aware of that. And here on the daily, that CCI seems to be almost reaching its limit, although the price has broken up through that previous resistance. And no divergence to talk of, but again, here we've got a fair value gap, and I'm going to extend that down to that level because we've got another fair value gap down there, so we might see prices pull back quite strongly. So on the daily, it's looking strong at the moment, or I suppose neutral I would call it, but just be aware of this fair value gap. Now on the intraday, we look at the 1 hour here versus the daily, and on the 1 hour we've got this bearish divergence. We had a bearish divergence here, it failed to complete, and that was extended, so I'm going to delete that. Again, I don't trade these, I just look at them as a potential for a retrace. So that was the initial area, and I marked a target area there. Can I remove that? So at the moment, the CCI looks like it's pulling back again. And again, the price hasn't quite broken strongly down yet, but if it does, we're going to draw a Fibonacci range from that high to that low. I will draw that target again, down to that 23-38% range. Again, the price can still rise. As long as the CCI keeps dropping and the price keeps rising, we're going to consider a divergence. It just means we have to reconfigure and recalibrate that pullback range. Now, in terms of backtesting, we move this to the weekly if you're trading on the daily. So again, just be mindful of that bearish divergence, and we show up the backtesting. Now, this is showing very similar results for the stop loss approach and the average down, both yielding about $77 and $76 respectively. But again, just be mindful of this pullback. We've got a bearish divergence on the weekly, plus this fair value gap on the daily. So NVIDIA is showing us a bit of a weakening signal actually. So you can see here on the monthly, it's still above its moving average range on the price chart, but the CCI is actually quite strongly showing a bearish momentum. And also the other thing to note as well is we've got quite a few fair value gaps down here. That one could have been partially filled, but I'm going to mark that anyway, right down to that range, down to this one here. So that's a range where we might see a pullback possibly in the coming weeks, months, or even years. So just be aware of that. So even though the price is still making some move to the upside, we might see a strong pullback because of this CCI move to the downside as well. Now also that was a bearish divergence, higher highs on the price. That actually broke down quite strongly and hit our target range on the monthly. On the weekly, another bearish divergence back here, and the CCI kept falling, and it's finally recovered, giving us a bullish momentum on the price as well as the CCI. But if I zoom in, you'll notice there we've got another fair value gap that hasn't been completed yet or filled. We had a fair value gap there. You can see the price broke quite strongly through there. Back here we had a fair value gap. Again, the price broke in there. This one is actually partially filled. That could actually align with the monthly as well. So I'm going to mark that as a potential area to look out for if the price starts crashing from where it is at the moment. But in the short term, that's where we're looking at initially in the short term for the next few weeks at least. On the daily, bullish momentum on the CCI as well as the price. say taking long trades. Here we had a fair value gap that was pretty much filled, or 50% of it was filled. I won't mark that yet. And if I zoom out, you can see that all those fair value gaps have been filled previously. So at the moment, bullish momentum on the daily. And if we go to the intraday chart, we've got the daily on the left here. So taking long trades. And on the hourly, we look for any divergence. And you can see there we've got bullish movement on the price versus bearish highs, or lower highs on the CCI. And that CCI seems to be still dropping compared to the price, still a bearish divergence. So again, if I was to draw a target range for that, I'd bring back significant, so take it back to that high. Let's take it back to that low there, significant low. And in the short term, we might see a pullback. Sometimes they don't always pull back. The divergence fail sometimes, but probably 90% of the time the divergence work. Now again, the price could still rise from here. As long as the CCI keeps dropping and the price keeps rising, we just have to recalibrate that Fibonacci range. Going to the back test, make that the weekly. If we're trading, this is the daily chart on the back test, and the weekly is showing, again, bullish momentum. You can see there the stop loss approach generate $190 with $1,000 lots traded each time, versus a few average downs happening there, $469, and the CCI is still rising, so it's still in play. Lastly, for Tesla, on the monthly, the CCI is broken into that moving average range, giving us a neutral positioning with a very, well, the price above the moving averages. But again, this month it's weakening so far. You can see there we had a few fair value gaps that were already filled. Back there was another fill, so they've all been filled. Even that one back there was filled with that wick of that candle. If I zoom out, again, in line with the other charts we showed, we've got some fair value gaps down here, quite ominous actually, because we might see a bit of a strong pullback at some point in the near term, or could be actually years again to play out. But that's a fair value gap there on the monthly. On the weekly, you can see there the price and the CCI are in those moving average ranges, giving us a neutral positioning. And again, the fair value gaps here, there's one immediately there unfilled yet, and looks like it may approach that range in the near term. If I zoom out, no divergence. And on the daily here, you can see the price is below the moving average, and so is the price. Again, we had a few fair value gaps there that were filled by these bearish candles, and another fair value gap here that would have been filled by these bullish movements so far. So even those were filled up there with that wick of that candle. And if I zoom out on the daily, that's partially filled. This one down here is not yet filled, so I'm going to mark that on the daily. And then if we go to the intraday chart, again, this is the daily, this is the hourly. We look for any micro moves, even if you're trading on the daily. Bearish momentum or bearish divergence here. We had a smaller divergence here in that little range that was hit already. And this is a larger one that's already been played out, and that would have been measured, if you were tracking it, between that 23-38% range. And you can see this one broke down to the 61% range. Looks like it's completed, and now it's making more movement to the upside on the hourly. So now if we go to the, and again you can see there fair value gaps that have already been filled, and a few fair value gaps up there. That hasn't been filled yet. I'll mark that. So again, I don't trade those. I look at them as a potential area for retraces. I trade predominantly with the CCI and the moving average breaks to the upside. So if we go to the back test for Tesla, this is an example of where you take your profits and stop taking trades. So again, this is the daily, this is the weekly. So we're trading in the direction of the weekly, and you would have stopped taking trades when the CCI broke down into that moving average range. You can see here the stop loss approach generated $190, and the average down up until that point generated, if you stopped it out on that candle, when it touched that moving average range, that would have been near that high. So that would have been, yeah, would have been about break even. So you would have been about break even on that one. In this case, the stop loss approach was a better option, generated 190 versus the average down approach generating 175. So if you're new to trading, we're now including a video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The +1 videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content, subscribe at least on a free trial to my Patreon page where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.